I see Bitcoin, it's going to go to two, three, 400,000 sometime in the next 18 months, probably on the sooner side of that. I mean, I expect 150 probably within, 6 months.
Welcome, Lawrence.
Hey, Laura, welcome. Nice to see you.
Yeah, I'm excited to chat with you. So for those in the audience who may not know you, you are an investment manager and at Equity Management Associates, and you're also the author of The Big Print.
I am sound money advocate for many, many years.
Yeah, so I really enjoyed reading your book, and we will dive into all of that in a second. But first, we're going to take a quick word from the sponsors who make the show possible. Binance is the world's #1 crypto exchange, trusted by over 290 million users. With industry-leading liquidity, security, and a wide range of digital asset products, Binance is the place to buy, sell, trade, and earn crypto. Download Binance today to get started. Hi again. So, as I mentioned, you wrote this book called The Big Print, which was published earlier this year. And you recently went viral for a tweet in which you told gold proponent Alasdair MacLeod, you stupid fucking fossil, in response to comments that he made that Bitcoin is run by shysters, crooks, and Ponzi schemers. So before we get into the details around, all your views and everything, why don't you just tell people how you became interested in Bitcoin in the first place?
Yeah, sure. By the way, that tweet, I kind of regret that tweet. He triggered me, but there's one thing I get triggered by. It's questioning my honor. And when he said we're all shysters and Ponzi schemers, and I've known Alistair for a long time, he's been a big gold guy, and I was just like, I'd had enough. It was just like, come on, man, wake up. I mean, you can say you don't like Bitcoin, that's fine, but this is a legitimate asset class, and he if anybody should know that. But I got into Bitcoin a long time ago. I came to it, as you know, and that's partly, why I was so mad about a gold guy taking a shot at Bitcoiners as a gold and silver guy, pre 2008. If you believed in sound money, as I have for 30 years, really your only choices were gold and silver. And I got into that through the Ron Paul movement and libertarian economics and Austrian economics. And I recognized that fiat system was broken many, many years ago. And so I expressed it, through gold, silver ownership, gold, silver stock ownership. The white paper came out. I wasn't aware of it when it came out. I heard about it a little bit in '09 and '10. I was kind of skeptical because there had been other attempts to do digital currency, e-gold and hash cash, and there were other things, and they'd all failed. None of them, the Liberty Dollar, none of them had really worked. And so, when somebody said, well, there's this digital currency called Bitcoin, my initial reaction was, well, that's nice, but great idea, but it's not going to work. Of course, I was wrong, but I was generalizing from prior experience. When it got to be a couple of bucks, Max was trying to tell me to buy it, and I still didn't believe. When it hit $100, I was kind of like, maybe there's something going on here. I started paying attention. I was close to buying some through Mt. Gox, and then they failed, and I didn't. And I actually bought my first coins in 2013 when Coinbase came public. So I was paying around $300 a coin. And, since then, I obviously learned a lot about what it is and the design of it, the architecture of it, and the immutability of it. And my confidence level in it actually being a sounder form of money than gold just kind of grew progressively through the years as, it continued to work and the problems got resolved. I mean, as we all know, there were some hard forks, there were block wars, there were potential security threats, et cetera. And every one of them got addressed. And of course, near the end, the biggest issue was, oh, the government's going to shut it down. Of course, and then they approved the ETF. So, we're now 16 years down the road, and I'm quite convinced that it is the future of money, and that we will all be, my grandkids will be paying for things measured in satoshis, not dollars. And gold and silver, while they're nice, they're inferior by comparison to Bitcoin. Although they are still sound money, and I respect people who don't want the volatility of Bitcoin, decide to buy gold and silver. That's fine, but I get pretty angry when they call us shysters and Ponzi artists, because that's just not what we're about.
Yeah, I find that usually people who do that are people who are financially privileged and don't know how financially privileged they are. And I found it interesting in your book where you talked about some personal experiences that your family had. And I realized, oh, this is why he was able to kind of understand the promise of Bitcoin early. So can you tell those stories?
Sure. Well, there were a lot of them. as I grew to understand Austrian economics, I mean, my grandfather had a business in Michigan in the 1920s that overexpanded using debt because the bubble of the that led to the Great Depression was being blown, and the Federal Reserve blew that bubble, as we all know. And then when the Depression hit, he spent the next 10 years begging the bank not to foreclose on him, and it really scarred my grandmother. My father had the same business in 1979-80, and Volcker took interest rates at 20%, nearly put my father out of business. And I mean, 20% interest rates, really? And then in my case, I was an investor in the great financial crisis, and I had the Michael Burry trade on. I was short all the financial stocks, or I mean, all the housing stocks, because you could see the bubble that was created there. And so I was short a lot of the stocks that ultimately ended up failing. And as you may be aware, or some people are aware, the government actually outlawed the short selling of financials on September 21 after Lehman failed. And so I was forced to cover all those short positions, which would have provided me with a very large profit. I covered them all at losses or small losses, and I spent the year down 6%. I should have been up 200%, and it's all because they changed the rules in the middle of the game. So and I think the point I try and make throughout the entire book is I just try to explain to people how this capitalism as we have it now isn't true capitalism, because the price of something very important, which is money, is being set by a committee of 12 people at the Federal Reserve. This is crony capitalism, and it's been set up to benefit the government, the bankers, the Keynesian economists, and the people who figure out how to game the system. And it makes me very angry that the average American has been gaslit into thinking that they're doing something wrong, or they're not working hard enough when they go to the grocery store and have a hard time buying groceries. When in fact, really, it's a very conscious strategy on the part of the government, the banks, rich people, and the people who control the Federal Reserve, for them to benefit and for the rest of us to lose by paying higher prices. And we're not going to fix it until we return to a form of sound money. And the only way we're going to do that is to get a political movement, as big as the American Revolution or such, to really demand that we go back to sound money. And I think our best bet at doing that is for Bitcoin to overwhelm the system. I mean, gold and silver carried the ball for quite a time. I'm very happy to see Bitcoin come along, because I think it's better, and I think it's harder for them to suppress. And I think that they're gonna lose, basically. The current the broken Keynesian fiat system is, in my opinion, going to fail. The only issue is how quickly. And I kind of put it as a midpoint of probably 2032 or 3 or 4, somewhere in there. But we're headed that way quickly, in my opinion.
Yeah, I thought your book was very well argued. I mean, you go through a lot of history, and it's interesting because I feel like even if maybe I'd read it like a year or two ago, I might not have really understood it. But the more that I've experienced in my life, the more I am starting to see like all the things that you're talking about how a few people who have control design things in a way that benefits them staying in control. And
Exactly.
and this theme, yeah, like it's something that actually you see in many areas of life. It's not just around central banking or money. But one of the hypotheses you have in the book, which you sort of just alluded to, is that you think the US is on the brink of some kind of currency crisis. You talk about this debt doom loop. Explain, your views on that.
Yeah, absolutely. I mean, I think it's very important for people to understand that this started a long time ago with the Federal Reserve. It got worse in 71 when we went off the gold standard, and it's really accelerated since 2008. Prior to that point in time, the Fed wasn't actively involved in printing money the way they do now. The balance sheet went from 800, billion to 3 plus trillion. And then the COVID example took them from that 3 up to 9. It's come back into the high sixes. Um, the debt doom loop is something that's important for people to understand. As long as the government continues to run large deficits, and they've kind of been normalized now, that leads to them having to sell debt to pay for those deficits. And that debt creates more interest costs that they then have to pay, which in turn then makes the deficit bigger. And so you can see that you've got a circular reference here where, more debt sold, more interest costs, more interest costs, more deficit, more deficit, more debt sold. And eventually it spins out of control to where, there won't be enough buyers for the debt. And so what they'll have to do is what they did in World War II, which is yield curve control, where the government is the buyer of the debt. And the government's already kind of the buyer of the debt because Secretary Bassett has been selling short-term debt to buy the longer term in order to keep the longer term interest rate suppressed. And again, it's just, it's peas and shells. The monetary plumbing is made complicated by them so that the average person can't see what's going on. But in my book, I tried to explain it in terms that the average person could understand. And really, the conclusion is that all roads lead to Rome, which is money printing. You know, and it's just mathematical. If they don't print the money, they can't service the existing debts, and the whole thing will collapse. What I believe we're in is what I call it the everything bubble. And when the everything bubble bursts, it's going to lead to a sovereign debt crisis. And the reason that is that Bernanke told us with his speech, way back when, his helicopter speech, that the deflation is death. But we have a technology called a printing press, and we can prevent deflation. And of course, they've demonstrated that and proven that. And so, this is a 1929 style bubble in terms of the valuation levels of stocks and a lot of things, housing, et cetera, all driven by cheap money and the monetary distortions of the last 20 years. And it should collapse, and it probably will get burst and start to collapse. But then the Fed will step in as they did in '08 and as they did in 2020, and just print like crazy. And, that's fine. It keeps the system running. But it's why, after the COVID example, they grew. It's no coincidence that money supply grew 40% in the COVID example, and our grocery costs went up 40% in the example. So you can print the money to keep the system going, but it's the same amount of groceries and goods and services, more money chasing them, your prices are going to go up. It's pretty simple. So that's really what's going on. And sadly, it's getting worse, Laura. I mean, each one is happening more quickly, and each one is bigger. Bernanke printed 3 trillion over 3 or 4 years. Powell printed over 5 trillion over the course of 18 months, or maybe a tad longer, maybe 2 years. So, it's like childbirth contractions. They get more and more, intense and so forth. And so I think that the next big print, which the book alludes to, is going to have to take the balance sheet to 15 trillion or 20 trillion. And, it's going to unleash another wave of inflation. And it's interesting to me that with inflation really not tamed yet, we're still at 2.9 stated, and it's actually higher. Without it even tamed yet, Powell started cutting rates and made statements like they might start to trim the balance sheet runoff. And to me, that's all because the debt burden is bearing down on them. And they know that if they don't grow the money supply further, they're going to run into this deflationary collapse that they fear, and we all fear it. I mean, nobody wants a deflationary collapse at this stage. It would be so painful, it'd make the 1930s look tame and the solution to this inflation is to take interest rates up to a high enough level that people trust the currency again. And that's what Paul Volcker did in 1979 and 80 when he almost bankrupted my dad. But, back then you could do it because debt to GDP was 35%. And it didn't blow out the federal government deficit. Whereas today, debt to GDP is 124%. And so if we took rates up to some high rate, whole world would go bankrupt. So they've really painted themselves into a corner. And there's a way out. The way out is inflation, and the proper fix for the whole longer term problem. I mean, some accuse me of being a doomer, and I'm not. I'm a very optimistic person about the long term trend of humanity. I mean, look at the technology we're using right now. Look at all the great things going on. Look at AI. I mean, the world's going to get to be a much, much better place, but we have to solve this monetary problem. And until we do, inflation is going to be a persistent issue, in my opinion. So, we've got to address it. There's a chapter in the book that talks about how I would address it if I were president.
Yeah,
So,
yeah. Why don't you go into that? Because
well,
I was going to ask you, I saw
yeah,
in your book you said that you thought one of the ways out would be to embrace deflation, which,
yes.
yeah. So go ahead and talk
Well,
about
let's
the whole.
talk about that for a moment because it's
Oh, okay.
important. I mean, deflation is what happens when people and things get more efficient. Keynesian economics is what runs our system. Keynesians believe in unlimited growth, and growth is good. And just think about the math of growth of things on a resource limited planet doesn't work. I mean, you can't keep compound growth going forever if your resources are limited. So what we really need is efficiency, and efficiency is doing things better, cheaper, faster, which is what these computers and technology have taught us. And notice how computers, TVs, phones, everything, it's all gotten cheaper and better over time, and that's good. And that could happen throughout the entire society with respect to everything as productivity improvements flow through to society. But because we've got a monetary system that's built on debt and built on credit and built on those things expanding, we've got these two systems that are in conflict with each other: a monetary system that needs constant growth and a financial system that's getting ever more efficient. And of course, what the monetary system is doing is it's allowing the people at the top to rake off all the benefits of that efficiency. And so it's all because the price of money is not correctly set. I mean, the classical economic theory, interest rates are the price of money, right? It's you borrow money if you think you can do something with it that'll give you a better return. And that price, that interest rate price, should be set at a level, in a free market way, at a level which balances the supply of savings against the demand for investment needs. So somebody has a project and they say, I want to do this thing, and I think it'll give a 20% return, and I can borrow from you at 5, I'm going to keep the 15. Well, that's an economic market transaction. But when you start messing around with what that interest rate is, you screw everything up and everyone starts making wrong calculations, and we don't get more efficient, we get less efficient. And so we should all be living much better lifestyles than we're living even now, even as good as they are. And the wealth should be much more evenly distributed, because this system allows the people who are at the top, who know how to play the game of inflation, to steal from the rest of us, because they can borrow cheaply. Like there's a story in the book about the Real Housewives of Wall Street. There's the wife of the chairman of Morgan Stanley in 2008. She borrowed $200 million non-recourse at a low interest rate to buy troubled assets, and the Federal Reserve backed her in doing that. I mean, if that's not corruption, I don't know what is. I mean, it's complete crony capitalism. And so, you and I can't borrow $200 million from the Federal Reserve at low interest rates. And certainly the average, working guy can't do that. So it's just a really badly broken and unfair system that needs badly to be reformed. And probably more than anything else, that's why I wrote the book. I mean, I looked at, the blue-red debate, and I'm neither. I'm a libertarian. I believe, Ron Paul is the only politician I really like. I looked at that debate and I said, you guys are all missing the really central issue, which is the money is just broken. The title of Lynn's book. I mean, it's just broken. And until we return to a sounder form of money, you're going to have bad economic outcomes. And that's what we're getting, these really unfair outcomes where poor people are getting killed by inflation. The rich are getting richer every single year, and the government gets more power and more control over our lives because inflation allows them to basically do what they want to do. And so it's a mess. I mean, really, the only way to
Yeah.
encapsulate it is a mess. Now, did I answer your question? Because I kind of rambled on a little bit there.
Well, I mean, you started about embracing deflation, and
Yeah,
actually, something that I wanted to say is this is so funny, but back in, I think it was like roughly 2008 or 2009, I learned about steady state economics. And I
yeah,
learned about that through a totally different political way, like a more leftist side, like through
sure.
environmentalism.
Yeah,
And it feels like the same thing because you were talking about like we're on this resource constrained planet. So the notion that like, the economy could just grow and grow, it anyway, it's funny
it
because
doesn't.
it's
Yeah,
like the same ideas arrived at from totally different
it
angles.
doesn't work. Yeah, I mean, the way for human beings to enjoy better lives is to get more efficient. You know what I mean? To do things, engineering really more than anything else drives human prosperity. And, when you have the money pricing set incorrectly, as we do with the Federal Reserve running the show, the wrong things get funded. The government becomes too big and powerful. Just all kinds of the incentives just become all wrong. I mean, why do we pay, 18 cents a kilowatt hour here in the United States for power when or 14, I think it's the average nationwide, when China has it for 5 cents? Well, because they're building nuclear power plants and they're thinking forward. And then the same time frame where they were building nuclear power and making their grid more efficient, we were wasting $8 trillion on wars in the Middle East. I mean, and that occurred because the government has a lot of power, and Dick Cheney and Halliburton and other people who profit from those wars were able to, gin up the notion that Saddam had, weapons of mass destruction, and off we went. And so again, this is all just it's just these are all functions of the same core problem, which is the broken monetary incentives. And I think that one of the great hopes of Bitcoiners is that if we fix the money, a lot of these problems will go away because government won't be able to print the money to do the things that make no sense. and the,
Yeah.
and government does a lot of things that make no sense, right?
Yeah. So in a moment, we'll talk a little bit more about how Bitcoin can be a solution here. But first, we'll take
Yeah.
a quick word from the sponsors to make this show possible. Binance is the world's #1 crypto exchange, trusted by over 290 million users globally. With world-class liquidity, security, and a wide portfolio of digital asset products, Binance makes crypto easy for everyone. Whether you're new to crypto or a professional, Binance offers a simple user experience. Learn with Binance Academy, browse hundreds of tokens, and track your portfolio on an easy-to-use dashboard. For experienced users, Binance Pro provides industry-leading services and bespoke trading products. With some of the lowest fees and deepest liquidity in the market, it's no wonder over 290 million users choose Binance for everything crypto. Buy, sell, trade, earn, live crypto. Download Binance today and begin your journey into the future of finance. Disclaimer: Binance is not available in certain countries, including the US. Check its terms for more information. Binance.com/en/terms. So you wrote in your book that, because we were just talking about war, you wrote in your book that you feel like Bitcoin defunds war, which I thought was super interesting. I'd love to hear more about that. And just generally, you compare it to a number of other traditional investments, such as real estate, stocks, precious metals, et cetera. And, you talked about why you feel like it shines amongst that group. So I'd love to hear about those two
Yeah,
things.
well, let's go to the defunds war thing first. I mean, so think of what a country is. It's a group of people all living together under kind of a common set of beliefs and rules. In our case, the Constitution, theoretically. And war is one of the stupidest things human beings can do. Right? It kills people. It destroys property. It wastes money on munitions, etc. It's just a bad idea. And unless you're defending yourself against people who are trying to attack you, I get that. And if you look at the history of the United States, or the history of countries in general, wars are very, very expensive. And so if you go to the populace of a country and say, hey, let's run this war, and by the way, you got to send half your income into me, or 2/3 of your income into me to pay it, the population is going to go, no way, we're not doing that. We don't want to fund it. But the government's figured out a workaround. It even started with the War of 1812 because they suspended specie payment, to fight that war, and the war before that, the Revolutionary War. We had a hyperinflation event because the currency that we printed, we printed to excess. And so it's the point I'm making is it's very hard. War's expensive. It's very hard to fund them, and it generally involves inflation is involved. And so, you know, Civil War, Lincoln issued greenbacks, huge inflation as a result of them, and they lost all their value. The Federal Reserve got founded in 1913, World War One, and we had 100% inflation coming out of that war. The price level between pre-war and post-World War One in the United States doubled, and you had all kinds of strife. You had, a rise in lynchings, a rise in labor unrest, etc. It was a very bad period of time. Inflation pulls at at the strings of society. A lot of costs to do. We actually did it well in World War II. A lot of cost to run that war, and we printed the money, and we grew the Federal Reserve balance sheet, and we put in yield curve control. And the reason it didn't result, and we had very high inflation. Most people don't know it. There were some months in the 1947, 48, 50 area where inflation was running 20% year on year. Okay, it was really bad, and bondholders just got totally annihilated. I mean, they had the yield curve control in place, and long-term bonds were paying 2.5, and short bonds were paying 3/8%. So they all got killed. But the point I'm making is that what got us out of that without that debt burden is that over time we had a much better demographic situation. We had the automobile, or we had the growth in the country expanding in terms of both housing and the interstate highway system, and we grew out of that hole. But the reason to answer your question of why it defunds wars, because the average person, knowing what a war is going to cost them, would vote against it, and would push their congressmen and congresswomen to vote against it and stop it. Although many wars have been undeclared, they're supposed to be declared by the Congress and not. The point again is if the government doesn't have the money, they can't fight the war. And it's the money supply inflation that allows them to have the money. If the money were sound and they wanted to have a war, they couldn't afford it because the people wouldn't give them the money and they wouldn't have the money to pay for it. And no soldier or nobody's going to build you ammunition or weapons if they're not getting paid for it. So I think that's how it defunds war. To address
Oh,
your question of
and
Bitcoin
but
is
then sorry, just to connect the
that's
last
okay.
dot, is the
Yeah,
last dot that the government has adopted Bitcoin as a currency or what?
I think that's right. To get there, the government will have to adopt Bitcoin as a currency. I mean, my view is that currency and the government should be separated, very much like religion and the government. I mean, I think we need, my view, I'm a very classical economist, libertarian point of view, or classical liberalism actually was the original school of thought. We need a government, in my opinion, to build the roads and enforce, laws of justice. I mean, I want to see criminals and thieves put in jail just as much as the next guy. And, my estimation is that we could, if we all paid a 10% tax on everything we bought, flat tax, that would probably pay for those two functions. Everything else the government does, I don't think we need. And I really do think that as we grow as a species and we get more and more enlightened, the notion of countries fighting other countries, it's just not going to happen. I just don't think, I don't imagine the average Chinese peasant wants to kill Americans. I don't imagine the average American wants to kill Chinese people or Russians. I mean, most average people aren't psychopaths. People who are warmongers, in my opinion, are psychopaths. And so if we defund them, then we won't have wars, in my opinion. So I think it's a beautiful thing, and sound money makes it a lot harder for a government to figure out how to conduct a war. So that, in my
Yeah.
view, when we go to a Bitcoin standard, which I think we will, um, wars are going to be a much less common thing, if not extinct entirely. To your second question about Bitcoin versus the alternatives, so, basically, sound money is all about scarcity and stock to flow. I mean, Saifedean taught us this with his seminal book. And, there is no sounder money than Bitcoin. The supply is fixed, it's algorithmically set. It's currently, stock to flow is half that of gold. It's got eight tenths of a percent dilution here. Gold's 1.7. And every 4 years, that gets cut in half again. So, this is the soundest money that's ever existed. It solved a problem that's been with mankind for thousands of years. I mean, gold and silver, they were the soundest money. But even in the case of silver, when the Spanish found South America and they brought all that silver back from South America, it grew the money supply enormously, and there was super high inflation. So, here you've got, by creating digital scarcity, what Satoshi did was he gifted us with a form of money that is mathematically limited. And, I've been waiting a long time to say this. That's why it's going up forever, Laura. It, it really is. I mean, it's a fixed supply, and as more and more demand emerges for it, the price will never stop going up. So, it's a really elegant and beautiful solution to a problem that all of humanity has. And, I wrote the book because I think that, I care about my kids, I care about my grandkids, I care about, average people in the country. I see a lot of people hurting, and I think that, and I see a lot of people being gaslit and arguing about things that, in my opinion, aren't nearly as important as this fundamental issue of sound money. And so that's why I've been such a loud advocate for sound money. And then, of course, I'm a self defender. When guys like Alistair trigger me, that just, I couldn't bear it. I mean, I am about as far away from a shyster as anybody can imagine, I think. And to be called that, I couldn't bear it.
Yeah. Well, I did. This is the perfect segue because I did want to ask about the fact that we're seeing gold, near these all-time highs,
Yeah.
and there's this kind of moment where we're seeing like the U.S. dollar is slowly devaluing. The gold is just on this precipitous tear. Bitcoin, has been at all-time highs recently. It's kind of faltering now, but when you look at this moment in time, how are you How are you invested? Are you invested more in
Yeah,
Bitcoin,
sure.
more in gold?
Well, in terms of my personal, I mean, I have a house, but other than that, in terms of my personal savings, I'm much more heavily weighted to Bitcoin. I don't know, I
And
haven't
why?
done yet.
Explain, like, why that's
Well,
your
because I think it's the fastest horse in the race, and I think it ultimately will become money, and so and I think it will demonetize gold. But it's not to say that gold is bad, because that demonetization process will take some years, arguably decades. And I come at it from a gold point of view, and I haven't sold any of my gold because I still believe in it. What's the weighting is, I think I'm about 70-30 now, Bitcoin gold. But that weighting is really, it's gotten there because the Bitcoin's gone up a lot, not because I've sold any gold. And so, um, the in terms of the two right now, Bitcoin is incredibly cheap versus gold. It's against the bottom trend line of the Bitcoin gold ratio, and it's about to launch. I mean, if somebody had a new dollar today to invest, I would strongly encourage them to put it into Bitcoin. And I've actually even been selling a few things that are somewhat related to gold stocks, and using those proceeds to buy Bitcoin related things like either Bitcoin or MicroStrategy, which I believe in. So, they're both going up and to the right, but Bitcoin's going there more quickly because gold is fully distributed and Bitcoin's being adopted. And so that adoption curve, I mean, the gold market now is about 27 trillion, Bitcoin's about 2 trillion. Total fiat assets, according to Jesse Myers, are about 900 trillion. And I think Bitcoin will ultimately pass gold. And so to me, Bitcoin has got more alpha and more asymmetry than gold, but they both have merit. The thing that's useful about gold is for really old people who don't want big volatility or drawdowns. It'll protect you against debasement without, it won't go up as fast as Bitcoin, but it won't go down as fast either. So, and some people like that. This period, interestingly, Laura, kind of reminds me of the 2018, 1920 period. If you go back, I've got a chart on this. I'm happy to share it actually if you want, but that shows that gold it's more widely distributed, more held by more people, and it tends to smell out the monetary debasement before Bitcoin does. And so Bitcoin tends to sit back for a while, and gold moves first. And this big move in gold, in my view, is coming because Jerome Powell is out at the end of the year. The Doge program failed. Everybody knows they can't stop spending as much as they're spending. The big, beautiful bill got passed. We just bailed out Argentina for 20 billion. Oops, no, it's 40 billion, right? And and so, everyone can kind of see that, it's Lynn's point, nothing is going to stop the train. And so, with that in mind, people are saying, hey, you know what? I need something to protect me against this money printing and inflation. And the easiest, obvious choice for most people, because they don't know about Bitcoin or understand Bitcoin, is to buy gold. And then what tends to happen is Bitcoin lags behind it a little bit, and then it just comes racing by it. And so I remember in the early 2019-20 period when the repo crisis hit, gold started going up quite a bit, smelling what was coming, and Bitcoin was on flatline. In 2020, COVID hit, and Powell came in with his big money printing operation. Gold took off like a rocket. Bitcoin flatlined for a while. About 2 or 3 months later, Bitcoin woke up and it went from 10 to 60. So it went up, gold went up 40%, Bitcoin went up 6x. It crushed gold, but there was a lag. And the chart I'm referring to shows that. It's on my Twitter feed. That chart shows that. And so I think, what we're looking at here is when Bitcoin wakes up on this next money print, which I think we're close to being at, I see Bitcoin, it's going to go to 2, 3, 400,000 sometime in the next 18 months, probably on the sooner side of that. I mean, I expect 150 probably within 6 months. So,
Oh, wow.
well,
All right.
yeah. So
Well, people heard it here first.
it's coming. I mean, well, look, I've been wrong about a lot of things. So don't. I mean, I offer you my opinion and do with it what you will. I could be dead
Yeah.
ass wrong, but I have been. It is what I do, and it's what I wrote the book about. I have been watching this stuff for a long time. So, and it is my strongly held opinion.
Yeah, yeah. Again, as we've said on the show plenty of times, nothing here is investment
It's
advice.
not investment advice. No.
Lawrence, we're a little bit past time, but I did want to see if you're available just for a last couple
I
questions.
can take as much time as you like. Sure.
Okay, great. So, as you mentioned earlier, you're a fan of strategy, formerly MicroStrategy. And as I'm sure you're very well aware, we're in this period where there is this trend with all these DATs, these digital asset treasuries. And
Yeah.
strategy is essentially the first DAT. It's very, very successful. I wondered what you thought of the category overall. Like, do you think any other DATs will be successful? Do you feel like only strategy could be successful?
That's a
Why
great
is it
yeah,
that
it's a
these
great
trade at
question. It's
a
a great
greater than
question.
one MNAV?
Yeah, I'd like to weigh in on that. It's a great question. So first of all, I think they're a good thing. They're really like closed-end mutual fund holding companies buying Bitcoin, and because they're corporations, they're able to use some leverage in terms of either debt or preferred stock. And so, really, in my mind, what they represent is a levered form of Bitcoin. They're kind of Bitcoin on steroids. And the question that I think the market is in the process of sorting out, is what do you pay for that leverage, and how much leverage should you have, and how good are these management teams? And so, we saw a lot of excitement as they all came out. We saw a lot of people thinking, okay, these guys can, issue stock at the market above the underlying price of their Bitcoin, and therefore they're catching a premium. They can put that into the Bitcoin, they can grow the MNAV per share, and that's a perpetual money machine. And while there's some truth to that, eventually that growth slows down, and the MNAV collapses closer to, or in some cases now, and some of them it's below, the Bitcoin that they hold. And I don't know what the right MNAV multiple is longer term. I mean, this is kind of like banks. Banks tend to sell at kind of 1.5 to 2 times book value. And the reason they do that is because they have assets and liabilities that they put to work and they earn a spread on them. And it's kind of similar with Bitcoin treasury companies. And I'm guessing the Bitcoin treasury premium should be somewhere between 1.3 and 2 times MNAV, depending upon who's running it and how good a company is. I think Sailor right now is at 1.4. I could be wrong on that, but it's close enough. And they have merit. I mean, what he's done with the stretch product, I think is very interesting. I own it. Um, he's issuing a perpetual preferred stock. It's very well covered by the underlying value of the Bitcoin that the company holds. And he's committed to paying 10% on it. And the Bitcoin he owns, he believes will appreciate. Right now, the ARR is 38% a year, but he believes it'll be north of 30 for several more years, quite some time. And so he's really just earning his shareholders the spread, right? He pays out 10%. The value of the underlying asset grows by 30. Well, he's got a 20% spread, and that goes to his shareholder. So it's a logical strategy, and as long as he doesn't get too levered and suffer through an incredibly bad bear market. But even if, as we've seen, these bear markets generally don't last more than 4 years, and I don't see how he really gets in any trouble or it doesn't work. I mean, unless we're just fundamentally wrong about Bitcoin. If the price of Bitcoin goes down and stays down, and all the adoption that we've seen somehow reverses, well, then obviously this isn't going to work, and it'll fail quicker than anything else because it's levered. In terms of how many of them there need to be, and I can see quite a few of them. I mean, there's an argument for different countries. I mean, Metaplanet took advantage of Japan. There's one now called Orange, which is taking advantage of Brazil. They're different categories. I mean, some use debt, some use preferred, etc. But, do I think they will all survive? No. Not all the management teams will be, prudent and smart and do the right thing. And some of them will probably get over levered. And so in a downswing, they might lose their access to capital and, have to sell coins to pay the dividend. I mean, there will be, look, my personal view, and I own some strategy. Okay. Not a lot. I mean, compared to my Bitcoin holding, but I own some because I think Michael's doing the right thing. And I do think it will outperform the underlying coins. But my personal view is this is an asset that is really performing better than any other asset in history and has an enormous IRR. Don't be stupid and try and lever it up. Don't be greedy. I mean, sit with a calculator and compound something at 30% a year for 5 years, 10 years, 20 years, 30 years. It gets nuts, right? And that's what Bitcoin is. I mean, it's a compounding machine, for the next 5 decades or more. And so, in light of that, why do you need to add leverage? I mean, I see these kids on Twitter and other places who talk about, well, yeah, I know it's going up higher faster, and this 38% a year is not enough for me. I'm going to add some leverage, or I'm going to take all my Bitcoin, sell it, and buy Metaplanet. But Metaplanet's selling at an MNAV multiple of 7, and I'm kind of like, oh my God, you're not thinking about this correctly. Do you know what I mean? I mean, if you get, you don't need to be so greedy, and you don't need to lever yourself up with Bitcoin. Bitcoin is the best performing asset out there by far. Just holding it, just hodling it and forgetting about it is probably what 9 out of 10 investors should do. If you want to play the treasury, the Bitcoin treasury companies, fine. but just be aware of the risks you're taking, you know?
All right. So, last question. You kind of
Sure.
answered parts of it already, but so far, we kind of have these like four major assets that we've been talking about throughout this episode.
Yeah.
Bitcoin, gold, the US dollar, and stocks, I think would be the other one. And, you kind of talked about how you think Bitcoin is sort of poised for a breakout over the next like year or two. I just wondered if at the same time you could talk about how you think those other three assets,
Absolutely.
gold,
Well,
yeah,
look, I think we're in a sovereign debt crisis. And so I think gold, Bitcoin, and silver are all going to do well to varying degrees. I think Bitcoin will probably lead. Silver actually right now will probably be number two because it's coming out of a long suppression period and it's been held below its peak of 50 for a number of years. I could see it going to 100, 150 really easily. I think gold's going to continue to go up just because they're going to continue to debase the dollar and central banks are going to buy it. So stocks are a really tricky and interesting question, Laura. If you look at any historical metric, they're extremely overvalued. Market cap to GDP, PEs. I looked at recently. In fact, it's in my most recent quarterly letter. I think the Mag 7 stocks are selling at like a 40 something average. Multiple. I mean, that's nuts. That's so high, so extreme. Now, some of those businesses are monopolies. I get it, but that's pretty expensive. But I'm not here calling for a crash because with easy money and more money and credit being fed into the system, the stock market has kind of proven that it's an energizer bunny. But having said that, and if you look at cases of very high inflation and hyperinflation, stocks have to a degree protected you. I mean, look, the thing that we know is absolute death in high inflation environments are bonds, right? The notion that you're going to get 3% interest or 4% interest and get paid back your principal in 10 years, that's a bad deal. The principal is not, it is, it's just a terrible, or 30 years, 20 years, 30, it's ridiculous. You're just, yeah, you'll get paid back the principal, it just won't buy as much. So bonds are the big loser. Stocks, they represent the earnings power of businesses and if you look at stocks in hyperinflationary countries like Weimar Germany or Venezuela, they went up a great deal in nominal terms compared to the value of the currency. They didn't really gain that much. If you look at the last inflationary period of the 70s, stocks they flatlined. They didn't go down. Well, they had a dip in 73, 4, but in general, throughout that 10-year period, they're kind of flat. Bonds got killed. And actually, the two best categories for stocks in the 70s were gold stocks and oil stocks, which kind of went up 30% a year compound annually. So stocks that aren't commodity related and that are very overvalued, I'm not a big fan, but I don't, but I get it. They've worked and people think they'll keep working and maybe they will. And, I don't know if you've heard the term crack up boom, which is when they just keep printing so much money that the value of everything goes up. I mean, it kind of feels a little bit that way to me. And so I wouldn't, let me say this. The last 5 years, I've lost a lot of money trying to short the stock market. And now I've stopped doing that, so they'll probably crash. you know, but it's just kind of like they're the Energizer Bunny. I mean, and they just are. I do think I have to say though, honestly, if you ask me my gut feeling, I think we will have it because I see cracks in the system right now that remind me of 2007 and 8. These big bankruptcies. These auto related bankruptcies that have just happened. The First Brands and the other one, Tricolor. This has a little bit of a housing bubble feel to it when the Bear Stearns funds failed, and you're starting to see the unemployment numbers just got revised downward very steeply, and you're just starting to see the economy cool off a little bit. And stocks right now they're priced for perfection, and so if we do have an economic downturn, it wouldn't surprise me at all to see a pretty severe correction in the stock market. I mean, I'll say this in terms of general stocks, which I've been exposed to throughout most of my career, I don't have any exposure right now. I mean, I have silver and gold stocks because those are related to the precious metals, which I think are going to go up a lot. And I own a couple of commodity related stocks, but general stocks, I'm not a big fan. But I can't, it's not the worst place to be. And they kind of fit with real estate, by the way. I mean, real estate, at least it's a real asset, right? They can't print real estate. But the thing I don't like about real estate is you can't move it and they can tax it. And, I think we probably had a little bit of a bubble there too. I mean, we built a lot of McMansions. I'm not sure who's going to buy them. you know. So we'll just have to see. I mean, for my savings, my three favorite buckets are gold, silver, and Bitcoin.
All right. Well, Lawrence, it's been such a pleasure chatting with you. For anybody who hasn't read his book, I recommend it. It's
Yeah.
yeah, yeah.
Let me
Let's
just
show it on screen.
I'll just hold you up a copy of it there. So
Yes, and it's
yeah,
orange.
yeah, it's orange.
Beautiful.
It's available on Amazon. Hard copy, paperback, digital, and there's an audio version too. So, and
Yes.
I'm working. Anyone want international is wondering about the translation? I'm working on all those. It takes time, but I'm working getting it out in Portuguese, German, Spanish, etc.
Oh, great.
Yeah.
Nice. All right. Well, Lawrence, it's been a pleasure. Thanks so much for coming on Unchained.
Oh, thank you, Laura. Very nice to talk to you. Take care.
Yeah.